What are the top assets that shape the global economy? Assets are the bedrock of wealth, a vast array of tangible and intangible entities that hold significant value. They are the building blocks of prosperity and financial security, offering potential for growth, stability, and income generation. From real estate to stocks, bonds to commodities, each asset class presents its own unique opportunities and risks. The world of assets extends far beyond these traditional formats, embracing newer, innovative forms such as cryptocurrencies and intellectual property. Even art, collectibles, and precious metals have found their place in the asset landscape, cherished for their rarity and intrinsic value. And let's not forget about private equity, hedge funds, venture capital, natural resources, derivatives, foreign currencies, and sovereign wealth funds. Each of these asset classes plays a crucial role in the global economy, contributing to its dynamism and resilience. Now let's delve into the top 15 assets that play a pivotal role in the global economy. Starting off our list with real estate, a classic and significant asset. Real estate includes land, as well as anything permanently attached to it, such as buildings. This form of asset is known for its stability, often appreciating in value over time. It's a tangible asset, something you can see and touch, providing a sense of security. Real estate can also produce a steady income stream through rental properties, making it a favorite among long-term investors. Next, let's delve into stocks. Stocks are essentially a slice of a company that you can own. When you purchase a stock, you're buying a piece of that company's potential profits and risks. Stocks are traded on various markets worldwide, making them highly liquid assets. They offer the potential for both dividends, which are periodic payouts of a company's profits, and capital growth, as the value of the company, and consequently its stock price, may increase over time. Stocks can be a bit of a roller coaster ride, with values fluctuating based on a myriad of factors, including the company's performance, economic conditions, and market sentiment. Finally, let's discuss bonds. Bonds are like IOUs. When you purchase a bond, you're essentially lending money to the entity issuing the bond, whether it's a corporation or a government. In return, the issuer promises to pay you a fixed rate of interest over a specified period, and to return your initial investment at the end of that period. Bonds are often seen as safer than stocks because they provide a predictable income stream. However, they also typically offer lower returns. So, there you have it. Real estate, stocks, and bonds, each with their unique characteristics and roles in the financial world. Some prefer the tangible security of real estate, others the potential high returns of stocks, and still others the predictability of bonds. But the savvy investor knows that a diversified portfolio, which includes a mix of different asset types, is often the key to weathering market storms and building wealth over time. That covers the first three assets. Moving on to more tangible assets. Commodities and precious metals, the tangible assets with intrinsic value. These commodities include physical goods like oil, agricultural products, and metals. They play a fundamental role in the global economy, often acting as a barometer for economic health. Their prices fluctuate based on supply and demand dynamics, geopolitical events, and market sentiment. Now let's turn our attention to precious metals. Gold, silver, platinum, and palladium are more than just shiny objects. They are sought after for their rarity and inherent value. For centuries, these metals have served as a store of wealth. In times of economic uncertainty or rampant inflation, investors turn to precious metals as a safe haven. They are a hedge, a form of financial insurance, if you will. So, whether it's a bushel of wheat, a barrel of oil, or an ounce of gold, commodities and precious metals provide a tangible touch to the often intangible world of finance. From the tangible, we now shift our focus to the digital world. In the digital age, cryptocurrencies and intellectual property stand out as valuable assets. As the world becomes more interconnected and technologically advanced, these two asset classes have begun to shine, showing their undeniable value in the market. Let's start with cryptocurrencies. These are digital or virtual currencies that use cryptography for security. They are decentralized and primarily based on blockchain technology, a distributed ledger enforced by a network of computers called nodes. Bitcoin, the first ever cryptocurrency, has paved the way for thousands of digital currencies. Ethereum, Ripple, Litecoin, and many others have followed suit, each offering unique advantages and uses. Cryptocurrencies have the potential to revolutionize the financial industry by making transactions faster, cheaper, and more secure. They offer a level of anonymity and freedom that traditional currencies can't match. However, with high reward comes high risk. Cryptocurrencies are known for their extreme volatility, meaning their value can skyrocket or plummet in a short period. Now let's talk about intellectual property. This refers to creations of the mind, such as inventions, literary and artistic works, designs, symbols, names, and images used in commerce. Intellectual property is protected by rights like patents, copyrights, and trademarks, which enable people to earn recognition or financial benefit from their inventions or creations. In the information age, intellectual property has become an essential asset. It can be the key differentiator that sets a company apart from its competitors, or it can be a significant revenue source when licensed or sold. For example, tech giants like Apple and Microsoft hold thousands of patents that protect their innovations and maintain their market leadership. Digital assets are a testament to our evolving economy, but let's not forget the classics. Traditional assets like real estate and stocks still hold a significant place in most portfolios. So, while it's important to embrace the new, it's also crucial to respect and understand the old, because at the end of the day, a balanced portfolio is a winning portfolio. Art, collectibles, and private equity, the assets of the discerning investor. While these assets might seem a niche, they represent a significant portion of the global asset market. Let's delve into this exciting world of alternative investments. Art, with its aesthetic appeal and historical significance, has always been a store of value. From ancient sculptures to contemporary paintings, art pieces often appreciate over time, offering potential high returns. But remember, the art market can be unpredictable, and the value of a piece of art is often subjective, depending on factors such as the artist's reputation, the artwork's provenance, and market trends. Moving on to collectibles, a category that includes a wide array of items such as vintage cars, antique furniture, rare stamps, and even comic books. These unique items often hold significant sentimental and monetary value, coveted by collectors worldwide. However, like art, the collectibles market can be volatile, and the value of an item can fluctuate based on demand and rarity. Now let's turn our attention to private equity, an asset class that involves direct investment in private companies. Private equity can offer high returns, especially when these companies grow or go public. But it's essential to understand that private equity also carries high risk. These investments are illiquid, meaning they cannot be easily sold or exchanged for cash. Plus, the success of private equity investments often hinges on the performance of the invested companies. So, art, collectibles, and private equity each offers unique opportunities for investors seeking to diversify their portfolios beyond traditional asset classes. They offer potential high returns, but with these come a higher risk and the need for specialist knowledge. While these assets cater to specific investors, there are other assets that serve a broader market. But regardless of the type of investor you are, the key is to understand the asset, the market dynamics, and the risks involved. After all, as the saying goes, don't put all your eggs in one basket. Our final set of assets are varied, but each plays a vital role in the global economy. Let's take a deeper dive into these 6 intriguing asset classes. Starting off with hedge funds, these are alternative investment vehicles that utilize a range of strategies to generate returns. Being available only to accredited investors, hedge funds offer high potential returns but also come with significant risks. Next, we have venture capital. This is a high-risk, high-reward game where investments are made in early-stage companies showing high growth potential. The aim here is to reap substantial returns when these startups eventually go public or get acquired. Shifting gears, let's talk about natural resources. These are assets like timber, water rights, and agricultural land. They are vital for sustenance, economic growth, and often for their intrinsic value. Then, we have derivatives. These are financial instruments derived from an underlying asset, like stocks, bonds, or commodities. Options, futures, and swaps are all types of derivatives. They're often used for risk management or speculation, making them an important tool for many investors. Moving on to foreign currencies, another asset class that plays a significant role in the global economy. Investments in foreign currencies and forex trading can be influenced by a wide range of geopolitical and economic factors, making them both exciting and challenging. Finally, we have sovereign wealth funds. These are state-owned investment funds that accumulate assets from foreign reserves or surplus revenues. The goal here is to provide for future generations and to help stabilize the economy in times of financial crisis. Each of these 6 asset classes serves a unique purpose and contributes in its own way to the global economy. They offer a wide variety of opportunities for investors looking to diversify their portfolios and maximize their returns. These diverse assets form the backbone of the global economy, offering investors a myriad of options to diversify portfolios and build wealth.